Let's get more on this now with Josh Mahony, Chief Market Analyst at Scope Markets. Welcome back to the programme, Josh. Now, copper is trading at all-time highs. Is this a temporary spike from the mine strikes, or is this the permanent AI premium that we have to pay now?
Yeah, I think this is essentially the same story that we're seeing within the silver space at the moment. And what this is that we're seeing within the US a need to essentially grab resources. At the moment, it's the likes of the US against China, but certainly the rest of the world are starting to pay attention to it. Remember, if we're looking about Venezuela a couple of days ago, now everyone is talking about Greenland. And is this about the strategic importance of that land, or is that also about rare earth minerals? Potentially the latter, but certainly this is going to be a story that continues throughout 2026. If you're looking at stocks and wondering which ones are likely to benefit over the course of the coming year, I would say look towards hard assets that are going to be strategic in nature. Copper's one of them, rare earths another one, silver's another one, and this is really 2026 kicking off on that theme.
Right, and Goldman Sachs calls this rally a sign of growth, but if the raw material costs rise, doesn't that make the green transition more unaffordable for consumers?
Yeah, undoubtedly so. It really depends on what exactly the process is and how much copper is utilized for it. We have already seen the likes of Elon Musk say that the surge in silver prices could be catastrophic for some of the big tech companies. So certainly some of the producers of different products, say within the green space or within solar or wind, might utilize a huge amount of copper. If it continues to rise, then it might make it uneconomical or much more expensive. And then when it comes to some of your electronic products, it really just comes down to how much of the product is actually weighing on the price. It might only be a small amount, and therefore the amount that the end product rises is only minimal in nature. But if it's really a significant amount of the underlying costs of inputs, then it is the kind of thing that ultimately consumers will see being passed on to them.
And moving on to Asia, Beijing has banned rare earth exports to Japan. Is this the start of a full-blown resource war in the Pacific?
Yeah, I mean, this is notably targeted at sort of military usage because the Japanese have taken aim at the Chinese when it comes to comments around Taiwan and the potential for the Chinese to go into Taiwan. Notably, of course, we have seen the move into Venezuela from the US, and many had said that this is a precursor to the Chinese doing the same with their own hemisphere and taking over Taiwan. But certainly this is a reminder that essentially the Japanese, much like the Europeans, really can't rely on their neighbors. They have to really provide their own self-sufficient supply chains. And that's exactly what they're going to have to do going forward when it comes to rare earth minerals.
And stocks like Tokyo Engineering are jumping at 20%. Is the market betting that Japan can successfully break China's chokehold on these critical minerals?
It's going to be really difficult for them to entirely break their dependency on China just because they've built up such a huge sort of monopoly in that area. But certainly this is a highlight that people are aware of the need to become more self-sufficient. We've seen similar kind of things for Western rare earth producers. There's few of them, but when it comes to the major ones that are able to scale up and potentially get funding from the government, those are the ones that many people believe will be at the forefront of the ability or the push to sort of renationalize some of the productions of rare earth minerals in particular, given how important it is for the tech sector.
All right, we'll leave it there for now. Josh Mahony, Chief Market Analyst at Scope Markets, thank you very much as always.